Hello, in today's video I'm going to be explaining candlestick. Now, what is candlestick? Candlestick are type of price chart that display the open, high, low and close of the price of an instrument for a specific period of time, which is time frame. Now, who invented this candlestick? There's this man called Munehisa Homan. He's actually the one that created this candlestick, and he's a rice man trader. So he's a Japanese rice trader. So he introduced it to Western people, which were known through Steve Nelson in years ago. So according to his book in 1991, so he stated that this man Munehisa Homan is actually the person that invented this candlestick. Now, all these Western people, it's not today they started this their bad thing of a thing. They claim that yeah, they're actually the one that started this thing, but whereas they are not the one. If you read the book very well, before this man announced this person is actually the one that owned this thing, they went through some certain thing like that, but that's not what I want to explain here. So in trading, it's very important for you to understand candlestick open close. So this candlestick, you need to study them very well. So pay attention to the wick. So the wick is tell you the failure or the rejection of the candlestick or in a zone, either in trend line, support and resistance, supply or demand. So the body tell you the strength and the control. So we have many candlestick, and here this very one, I don't know if you can see my console. So here when you see the price of close, price of open, when the market is going up, like it is bullish, the market is moving up, the candlestick always open at the low, then you see a wick come down. This wick, this black one you are seeing, is the low. Here is the open. That means the market open, then it went down a little, then it start going up. It start going up. When it start going up, here is the last high. Here is the high of this candlestick in that time frame. Let's say you are trading 4 hour daily, 1 hour 30 minutes. So don't worry about this time frame, I will still do a video of that. So this is the high, then the market come down a little, then it close. Let's say this candlestick, it take it 1 hour to form. So after in immediately that 1 hour complete, then it come down and close here. Another candlestick open and start going up. So that is it. That's how candlestick are being formed. So I will still explain how the different type how they are. So also with bearish, whenever you see candlestick like the market is going down, you will start see some red candlestick going down. So here is the open. You can see price at open. It's open here, then it start going up. Then here is the high. Then the market starts selling down. It starts selling down. It starts selling down to this point here. Here now is now the low of this candlestick. Then it went up again and closed here. Then immediately it closed, another candlestick will be opened in another time frame. Let's say this candlestick is 1 hour. 1 hour has complete its whole job. Another 1 hour candlestick will open until that 1 hour complete before another candlestick will open again. So don't worry about that. So this is how candlestick are being formed. So let's go to the next slide. Now, to identify the candlestick behavior, we have three types. We have the pressure, we have rejection and elevation. Here, this candlestick is and a bullish engulfing candlestick. You can see that this is the open down here, this is the low down here, and this is the body, this is the high, this is where it closed, which means this candlestick have strength, like it's going up. You can see whenever you see a big body like this, you know that that candlestick in that time frame, it has a massive strength. You have massive strength. The market will still continue going up. The market will still continue going up. You have to pay attention to the body and the wick that show. So it show you the price. So this very one is a rejection candlestick. Let's say you choose support and resistance or trend line. Whenever you see a candlestick like this, it open, the market starts selling down. When it reach your support level or a demand or a trend line, you see that the market start going up. This candlestick that open here, it start going up. It start going up. It turn to a wick. So this long thing here is called wick. So the market start going up. It start going up. This way open. Then you see a red candlestick start going down. You think that okay, the market is selling. Then it now turn to bullish. Where it open before it start going up. Then it going up, come down again and close here. Which means it has shown a rejection in your support or demand or in your trend line. So that means your support or demand or the trend line is holding, you should be buying. So the next candlestick that will open is going to be like this very one, which means the market has gained strength. There's big momentum coming in, then the market start going up. So this very one is called doji. There are three type. They have not something I should be explaining here, but they have a graveyard, I mean gravestone, and a dragonfly. So this indecision, it means the bull are not winning, the bear are not winning. The bull mean the people that are buying, the bear mean the people that are selling. Whenever you see something like this, the market open, then it went down the low and it start going up. It come down to where it open again, because this very one it has body, but doji does not actually look like this, but this how it's being explained. I will show you doji how it look like. So it means nobody is actually winning. The next candlestick that will open here will determine the strength. It's either something like this open or something like this open. So that is it, guy. Whenever you see a doji, it means indecision. The buyer are not winning, the seller are not winning. They are just equal. So whenever the markets now close, then the next candlestick will determine who is winning. If it's open, the next candlestick open and start going up, then the bull are winning. People are buying. So that is it. So here, these are the candlestick formation. Now this is doji, this is bullish doji, this is bearish. Here is where it's open, this is the low, this is the body, this is the high, this is the close. So here is where this very one open. Here is the high, this is the body, this is the low, and this is the close. So this is doji and this is engulfing. Engulfing candlestick are the one you see that they have big body and small wick. So this very one is bullish. Whenever you see green, it means the market is going up. Whenever you see bearish, it means the market is going down. So this is the rejection candle I explained. These two candlestick, they are different, although they are called rejection, but they have their own name, which I will be explaining in candlestick video. So I don't want to mix things up here. So this is a money star. Let's say you are trading support and resistance and you see something like this big and engulfing candlestick open, start going down. Then when it reach your support or your demand or that trend line, you see a small candlestick open. It open. When it's open, it show you that okay, like when you hear something like morning star, you should know that okay, it is morning. When it is morning, like the sun will start rising, you should know that something that is going up. When you hear something like morning star, and so the market start going up. So this one is evening star. Whenever you hear something like evening, you should know that okay, yeah, this thing is going to be going down. Like it is already night. Night is coming. Everything should be going down. You understand? So that is just it, guy. When you see something like this at your resistance zone, you should know that the market want to sell. This is called pin bar, although it have different name. Money star, different thing. So I will explain that too. When you see that when something like this happen, I mean your resistance zone or supply on a trend line that is going down, you should know that the market want to come down. Whenever something, this candlestick is very powerful. Like there's one candlestick they call pin bar, hanging man, and the hammer. Those candlesticks are the most powerful one. Well, don't worry, I will explain them. So when you see something like this open in a bullish trend and something like this happen near your resistance or supply, that trend line, you should know that the market want to come down. So let me go to the next slide. So here you should understand that candlestick have a combination. Let's say you are trading on 1 hour time frame. Yeah, because I like to use 1 hour. That's my best time frame. And you see something like this. Something like this, like it's open here. No, I mean, yeah, it's open here. The market fell down. It's open here. The market start going up. Then it come down again. It start going down. Here is the low. Here is where it closed. Now, inside this candle, this very candle now, you are seeing this one that have this long black thing, red and small low here. If you go to 30 minutes time frame, it's going to be 2. Now, this week, this thing here now, like this very old thing. Oh, sorry. This thing now, it means that if you go to 30-minute time frame, this thing has another bullish candlestick inside of it. This thing now, this very one, it means bullish in another lower time frame. Well, you might not understand when I reach candlestick explanation and time frame, you will understand better. Don't worry. So whenever you see something like this on a bigger time frame like 1 hour, if you go to 30 minutes, you will see something like this very one. So this one, this bullish candlestick you are seeing is what happened here. Then before this bearish candlestick. So that is it. When you see something like this on 30 minutes, if you go to 15 minutes, the same thing you will see like this. So that's how it happened. That's how candlestick can be formed. So let me go to the next slide, then we jump to chart. I'll show you some candlestick there. All these candlestick I don't explain, I will still show you in the chart and how powerful they are. So like if you are trading candlestick, do you actually use only candlestick to trade? No, you need other things to trade candlestick with, like support and resistance, supply demand, trend line, and many other things like chart pattern, breakout, all these things. So yeah, now we'll go to the chart and I will explain some things for you there. Let me go to my trading view. Okay. Let me go to GBP USD. There is some candlestick rejection I saw there. Okay. So you can see that here, although I trade supply and demand, you can see that here there's a supply that this market went into. Now, I don't know if you remember what I said about this particular candlestick. Whenever it reaches your supply or resistance, here is also resistance level two. When you draw your two, like here or two, it's also a resistance level that the market is testing. You can see that rejection candlestick I told you, when it reached that supply or resistance zone, you see how the market crashed down. This candlestick is very powerful. I don't know if you can see it, this blue one that have that wick I told you about. So the market open here, it come down a little and start going up. When it reach that supply zone or the resistance, the next candlestick that open, it crashed the market down. I can see that the market went down very well. Then before it start going up again. Then when it go up again, it reach that supply or that resistance low. You can see that, you remember that indecision candle I told you about. You can see it in that black one. The market open here, it start going down, then start going up again. This is the high, this is the low. So it went down again to where it's open, which means these people that is buying, they are not winning. So the people that are selling, they are not yet winning yet. So the next candle that open, it show a rejection, although it does not actually show that rejection that much. It's very weak. Although because of we have this indecision candle here, whenever you see indecision candle at your support or resistance, the market might change. Although it's not that powerful candlestick, but at least it has some effects too. So we can see when it open, another candlestick start opening. You see another indecision. We have pin bar here. See the market went down. The market went down. So all these candlesticks I'm showing you, they have their own meaning. You can see the engulfing candlestick I told you about. Whenever it's open, the market always start going up. So this is new candlestick. So these are the trade that I take today. So you can see the pin bar, the rejection candlestick. When you reach my supply, the market starts selling down. You can see it's very powerful. I took this trades today. I also sent it to my signal group. Although let me see if my telegram is open. Okay, it's not open. Okay, yeah, that is it. Let me show you in another chart. Which chart to get GBP? The same thing. You can see it here, that indecision candle, the market. It's everywhere. You can go and check it. Okay, there's something I want to show you on gold. Let me delete all this thing. These are the trade I want to take. Let me go to daily time frame and show you how it rejects on trend line. Let's say you are a trend line trader. When you draw your trend line from here, you see whenever the market touch it, what happened? What candlestick formation did they see there? Although here there's demand zone here, around here, the market tap here and start going up. You can see that rejection here, and that indecision candle, there's one big crash. Then that indecision candle form again. The next candlestick that open on the next day, which means it took all this candlestick you are seeing here, it take the one day to form. This one day, all of them. So the next candlestick that open, because the market has touched this trend line, the next candlestick that open, it open bullish. The market start pumping up. Then when you come here again, the same thing. The same thing is everywhere. So you see, yes, resistance zone, the market reach and start selling down. You can see the same rejection candlestick. You can see it here. So now the market has broke this trend line and let's say the market want to start selling down. So yeah, let me show you. There's something I said about 1 hour candlestick open. Let me go to 1 hour and show you something. Okay, this is not too clear. Let me look for another chart. Oh, these are the trade I took. They're already moving. So let me look for a very big candlestick that open in 1 hour. Oh, this video is getting too long. Let me show you an engulfing candlestick that open in 1 hour. So honestly, I'm just showing the rejection candle. So guys, you guys should hold on for a while. I'm looking for the one that completes. Okay, let me delete this. Let me use this black candlestick. You see this candlestick? It took it 1 hour to form. You can see this candlestick is forming again. You can see the countdown 34 minutes, 18, 17. So when this countdown finish, it will end. You can see here is the open, here is the high, here is the body. Now the low is forming again before it close. So let me show you something in this 1 hour candlestick that formed before. Let me mark it. Then let me go to 30 minutes. You can see, you see, in 30 minutes it was 2 candles. Then let me show you, go back to 1 hour, show you something. Okay, now here is the open, here is the high, here is the body, here is the low, here is where it's open. Now let me show you something. I hope you see how that candlestick are forming this very one. You see? Okay, let me go to 30 minutes. You see it now? Inside that 1 hour candlestick, it was 2 candlestick. If you go to 30 minutes. So in 2 minutes time, that 1 hour candlestick that is forming, because I went down to 30 minutes, in 2 minutes time, this 30 minutes candlestick will close, another one will open. So you can see that here is the open, this is the high, this is the little body that is forming. It's forming indecision candle. It's forming indecision. Okay, now it's going up again. Let's say next 2 minutes it will close, the another candlestick will open. Okay, I don't know if I can wait for 2 minutes for this candlestick to open, then you will. Okay, let me wait. Let me just wait. At least 2 minutes is not that too long. Let me just wait and show you something. This video gets it too long, but it's worth it. Just be looking at the countdown here. Yeah, that's 0.38. So almost 1 minute 30 seconds. Okay, just be watching. We are on 30-minute time frame now. Let me go to 1 hour. You can see a 1 hour is one. Inside this 1 hour candlestick, if you go to 30 minutes, it will be 2. So let me go to 30 minutes. Okay, 51. After this countdown. We will stop the video here, then we'll go to candlestick formation. I mean candlestick, they are mean. So we have 30. Be watching this candle. Okay, let me delete this thing. Be watching 23 seconds, 21, 19. Be watching now. See the candlestick is forming. That rejection candlestick I told you. Okay, then the next candlestick that open will determine the trend, the direction of this market. So we are having that indecision candlestick. Okay, watch. Another candlestick open. After 30 minutes, then in the next 30 minutes, the other candlestick open. Here's where it open. Okay, let's see if another higher. So here you can see in 30 minutes another candlestick open. Immediately this 30-minute candlestick open, look here, we are on 30-minute time frame. Immediately this one completes, another one open. So all this candlestick here, it takes them 30 minutes to complete. This one 30 minutes, 30 minutes, 30, all of them. So there's something you should go on your charts, check them out. Check them out. So guys, that's it guys. That's the end of this video here. I will end the video here. So see you on the next video.